Hey everybody, Brian here from quantlabs.net. Today is the 15th of July, 11:30 a.m. Just did a comparison of Oanda forex data versus Interactive Brokers forex data, and now I'm going to just show you how badly the ETF space has been decimated over the last couple of months. So I'm going to go over to the screen here now. So here we are. There we go. Alright, so I'm going to show you two views of the market. This is using MotiveWave. The first one is 4-hour view. Okay, this is intraday. If I make it 1 hour, I don't think it'll make much difference because there's either too much volatility in the market, not enough momentum, positive momentum it is, and just a lot of negative. Just a lot of negative in it. So these are the ETFs to use for as symbols for Interactive Brokers. So as you can see here, these are excellent rated. Look at this. These are just downward trends on a 4-hour view. It's nothing but you cannot trade these. This is the entire spectrum of the market. It's about 50 ETFs here, and everything's just pointing down, and has been down in this case since March. And this is really tough to trade. The only place to go, as I keep saying, is forex, long-term daily holds on certain currencies, and especially with the US dollar strengthening, there's opportunities there, consistent opportunities. Again, no forward momentum since March. Now this is again from a global view among all these different commodity ETFs. There's ETFs broken down by country. Bonds, you can see here, just getting killed. Now there is signs of life here, but if you want to make decent returns, you have to move into the forex spaces I've hinted in a previous video, in any of the forex videos that I've already gone over, because you see just downward trend, nothing but not very good for the global, not very good for the investor, not very good for grandma and her savings. I don't know what to tell you. Now the other thing is, I'm going to go over and do the same thing with the daily view. And if you want my opinion, to trade this intraday, hourly, won't make a much difference. This is no different than the crypto market. Here's oil. Had a nice run up there, March, really good one along here, and an okay trend up. But now it's been in decline. That's why inflation, if you're a trader, you could have benefited from it. But it's now coming down, which is good. Here's copper. This one was a really good performer, but general down since last month. Now if I show you the weekly, that's a pretty good run up from March 30th till here of March 27th. 2022, and it's just very sharp drop off. Now remember, copper is used in manufacturing. That kind of decline, that sharp decline, that's a reflection of global demand for product to be manufactured. Another one we can look at, commodity wise, weekly view, is corn. Same thing. You can see here, this is inflation, and now it's dropping off. So we should start to see relief in the inflation. This one has some potential to take off as we move into cold season for natural gas. But again, weekly view, really nice run up. So I wouldn't be surprised we'll be able to get opportunity in natural gas. But generally, things are still not looking good Let's look at this one. Just that general decline. This is a bond, just to show you the weekly. Stable and it's just dropped off. It's a good thing, but intraday, if I looked at hourly, some stability and strength actually in the bond here. Now, if I was to do the same thing to change the time frame from 4 hour to daily, the difference is not much. Again, this is among 50 different ETFs, and it's just getting crushed. A lot of it probably has to do with the US dollar getting stronger, wiping out a lot of the emerging market. Sri Lanka comes to mind. Apparently Chile, they had to intervene on their currency in the last day. But you can see these general downtrends, right? And this is the state of the market right now globally. Everything's just down. Down, 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 down. Whatever you hear on Bloomberg or any of these idiots talking pundits, they throw all these figures and whatnot at you, trying to make it sound like it's all rosy. It's not. You see it. The charts don't lie. The data does not lie. These are, again, large ETFs, no performance. And if you're holding large sums going into retirement, you should be kind of nervous. Okay. Early in the year there were some gains, as I've shown here, but they're clearly in decline. There's the odd exception, but just generally, anyone says we're not heading into recession should have their head examined or get out of business, because they're lying to you or really incompetent. And they're also looking at lagging data. I mean, show me where the growth is. Show me where positive returns are coming. Show me positive momentum in the market right now. Do you see it? I don't. Not looking good. As I said, there is opportunity out there to make money and get returns, but it's not here in the global, it's not here in the ETF or equity market. But for now, at some point, obviously the equity market will turn around. This is China, just flat. Ugh, what a mess. These are different countries, which are MCSI. Here's oil. Again, nice little rally there. March till sometime in June. It's been in decline since. Again, copper, same thing. Corn's another good one. See a big decline there. That's price. Prices should be dropping. That dropped since last month. This one I would be encouraged with natural gas, as that might start to rally. Not trying to drop hints or anything, but that's probably the only one that I'm seeing right now. Bond, stable. It's a good one to have as a small allocation, but generally I don't know what to tell you. To me, it's pretty shocking. Anyways, we'll leave it at that. And if you want to know more, come over to our quantlabs.net/banking, get signed up. Your info is not sold or released. You can learn more about what I do. Talk to you later. Have a good day.